I'm Santosh and welcome to the tutorial session of Commerce Guruji. Let's talk about final accounts today. In this video, I'll be explaining you all trading account. The items appear in the trading account such as opening stock, purchases, expenses like marine insurance, customs duty, octroy charges, heating, lighting, etc. Let's start. After ascertaining the arithmetical accuracy of the ledger balances, through the preparation of trial balance, a business proceeds to prepare the financial statements. That is nothing but final accounts. The summary of ledger accounts organized in such a manner as to show the profit or loss of the business at the end of accounting year. Generally, financial statements refers to two statements. First one is income statement, that is profit and loss account, and position statement, that is balance sheet. The final accounts are prepared in two methods, that is final accounts without adjustments and final accounts with adjustments. Profit and loss account usually divided into two sections, that is trading account and profit and loss account. These accounts may be shown separately or they may be shown as one account called trading and profit and loss account. Trading account. It shows merely the result of trading, that is buying and selling of goods, called gross profit or gross loss. Here, the gross profit or gross loss on trading without considering of the indirect expenses and indirect incomes. It is prepared from only those transactions directly connected with goods. They are opening stock, purchase of goods, purchase of return, direct expenses incurred on goods, that is expenses incurred on purchase of goods, expenses incurred on bringing the goods to the place of business, and expenses incurred on the production or making goods ready for sale. And the next item in this account is sales of goods, sales return, and closing stock of goods. Let's see these one by one. To talk about the opening stock, it is the first item on the debit side of the trading account. In the case of new business, there won't be any opening stock. Opening stock includes only the stock of finished goods at the beginning of the trading period of a trading concern. But in the case of manufacturing concern, it includes stock of raw materials, stock of partly finished goods, and the stock of finished goods at the beginning of the trading period. The next item is net purchases. Purchases refers to the goods purchased for resale in the case of trading concern, or raw material purchased for manufacturing in the case of manufacturing concern. It includes both cash and credit purchases. To calculate the net purchases, the purchase return, that is the return to the seller, to be deducted from the total purchases. This is to be noted that if the goods are withdrawn by the proprietor for his personal use or goods are given as free samples, must be deducted from the total purchases to calculate the net purchases. The next item comes in trading account is direct expenses. The expenses incurred in procuring the goods and making the goods ready for sale. It showed in the debit side. Two examples of direct expenses are transport charges incurred for movement of goods. It might be inward or outward. Inward is when transportation charges incurred on the goods purchased. That comes on the debit side of trading account. Outward is when the goods are sold. That comes on the credit side of the trading account. If in the case it is not stated inward or outward, the common practice is that treating as inward. And it should be noted that the cartage, and the freight paid on the fixed assets purchased should not be entered on the debit side of the trading account. They should be added to the cost concerned fixed assets in the balance sheet. Another item comes under trading account is marine insurance policies or marine insurance charges. In this case also, if it is paid on purchases, it should be entered on the debit side of the trading account and reverse for the paid on sales. If the information on inward or outward for these charges is not clear, can be regarded as paid on purchases. In the case of customs duty, excise duty and octroy duty, it is same as earlier, where if it is paid on purchases should be shown on the debit side and on sales it should be on the credit side. The next item is wages. The wages are incurred in procuring the goods or making goods purchased ready for sale. They become direct expenses. It should be entered in the debit side of the trading account. If the wages are indirect wages, it should be entered in the debit side of the profit and loss account. In case wording wages and salary are together, then it has to be considered as indirect expenses. Next comes fuel, power, gas, water, heating and lighting charges, etc. Fuel, power, gas and oil are used for running the machines. So these are the direct expenses. Heating and lighting are maybe of factory or office. If it is for factory, then it is direct expenses. It should be shown on the debit side of trading account, and if it is for office, then it is an indirect expenses. It should be on the credit. If it is for office, then it is indirect expenses. It should be shown on the debit side of profit and loss account. If the nature is not specified, consider it as direct expenses and show it on the debit side of trading account. The next item is consumable stores. Refers to the lubricating oil, grease, cotton waste, etc. which are used for the upkeep of the machines. These are the direct expenses and it should appear in the debit side of the trading account. Here the actual consumable stores used should be recorded. The calculation goes like this, where the purchases of consumable stock during the year should be added to the opening stock of the consumable stores and the closing stock of consumable stores should be deducted. The point to be noted here is that the closing stock of consumables should be entered in the asset side of the balance sheet. The other factory expenses such as factory rent, factory insurance, etc. are the direct expenses which should be recorded on the debit side of the trading account. The packaging material and charges, these are the expenses which makes goods ready for sale. It should be treated as direct expenses and shown on the debit side of the trading account. But packing materials and charges incurred on the finished goods for safe dispatch to the consumers are considered as direct expenses and it will appear on the debit side of profit and loss account. In the absence of clear information about the nature of packing charges, it should be shown on the debit side of profit and loss account. To talk about the credit side items of trading account, first comes sales. Here, sales includes both cash and credit sales. Then the sales return should be deducted from the total sales. And the tax paid by a businessman to the government on sales made by him should be deducted from the sales. The last item is closing stock. It represents the stock of finished goods at the close of trading period in the case of trading concern, but in the case of manufacturing concern, it represents the total raw materials, stock of partly finished goods and stock of finished goods at the close of trading period. The closing stock generally doesn't appear in the trial balance. It is the value which has to be calculated by the process known as stock taking, where the unsold goods are listed. Those unsold goods are valued either as the cost price or at the market price, whichever is lower. Then the closing stock is brought into account by the way of adjusting the journal entry through debiting the closing stock account and creating the trading account. That's all in this video. Hope you found it informative. See you all in the next video of Commerce Guruji.
Commerce Guruji, the best platform towards knowledge. Like, share, and subscribe. Commerce Guruji, towards knowledge.